All right, Tex and Ads here with you. And one question that we get asked all the time by probably 90% of the hundreds of students that we have mentored over the last few years is, what's a trading strategy that suits me? Well, that's a very broad question because you really have to identify what type of trader you are. For Ads and I, we are swing traders. We do not want to be sitting in front of the screens all day. Most people want to be day traders. That's totally fine too. You can type Unity Trading Group trader type, and there will be a video where we've done a session with some of our inner circle students where we went through that. But getting back to this is a very basic strategy that we teach our beginner students or students that we are one-on-one mentoring. And it consists of three basic things. Obviously, it's going to consist of your horizontal lines of support and resistance, which Ads will draw in. It consists of our trend lines. It consists of something that is called supply and demand, and one basic tool, which is our Fibonacci tool. So we count trend lines and support and resistance as one thing because the analogy we use is that it's almost like baking a cake or putting puzzle pieces together. You don't get the full picture unless all the pieces start to align. So as Ads is doing here on BTC USD on the 1-day chart on Coinbase, we've drawn in our trend line here, which you can see in white because we're looking for a break of this downward trend. And then in the red, we've used our resistance where Ads has there, and we use down the very bottom our lines of support. So this is the first most basic element of trading. No matter how advanced you are or how advanced you want to be, you always start with the basics. And if you do want to learn more about how to use trend lines and support and resistance, you can go to our beginner trader series at the bottom of the page here, where you can learn how to do that. So second of all, we draw in what's called our supply and demand. Now, this is something that I guess we're pretty well known for. Ads as a Forex trader, come over to crypto, bring some of the elements of Forex over. So we kind of consider supply and demand like support and resistance 2.0. And the reason why we prefer using supply and demand over support and resistance is because we use, or the wording that we use for supply and demand is more like areas of interest.
Yeah, exactly.
So when you are using support and resistance lines, you're really looking for a very small margin to place buys or sells, being within just a couple of sats of each other. So with supply and demand, we've got demand down the bottom and we've got supply up the top. We're looking for these areas of interest where price will break into, and based on how far into our supply or demand it does break, we get an idea of the strength of a bounce or a rejection. If that sounds a little bit confusing, you can learn more, and this is what we dive into with our students, because supply and demand isn't the most basic of strategies, but it certainly is an incredible way to gauge strength of pivot points and to gauge strengths of rejections of trends or bounces from trends. So just to reiterate, we've got our levels of support, resistance, our trend lines, our supply at the bottom there, and our demand at the top there. So what we're going to do now is we're going to show you this playing out to give you an understanding of just how strong the validity of areas of supply and demand are. Ads, play it out.
So first things first, you've got the break in trend. All right. So you possibly know that this trend here that's coming down off 9,000 towards 6 is starting to reverse high. And then following that break in trend line, we start to move up. Now our first area of interest is this one here, just to the left high, all right, around the 7.6 level, all right. And then of course, making it up to our supply level right up there.
And Ads, if we just pause it there for a second as well, why, or very basically and very quickly, how do we determine where to draw our levels of supply and demand?
Don't get me wrong, there's no one way to do it, and this is what a lot of people fail to grasp, because every situation is different and every candle structure is going to be different to the last. Nothing's one in the same, but the general consensus is it works on market pivot points. All right. So this obviously is a pivot. This is a pivot. This is another pivot. And if we just go back slightly, this is another pivot here. Obviously we came up, made a pivot again and bounced off. So your level of supply, demand would be here just to the left. And then you've got some confirmation to the right of that there, Ty.
Absolutely. So we've got a break in this downward trend. We've got a pivot from our demand, and we've now got a pivot from our supply. And we can see to the left there as well how Adam has drawn up his first level of supply rather than his first level of demand. That first level of supply there. We've got a nice pivot point just there. So that becomes our supply. So if we continue playing this out, ads, let's have a look at how this might have played had you have drawn it up purely using supply and demand. We haven't even looked at one of our favorite indicators yet, which we'll touch on in just a second.
So supply and demand being as strong as these levels are, having these pivot points and having able to have previous data, you were able to pick it up off the 6,000 mark, swing it back up to the supply at the 8.2, and then just as easy as you did before, pick it back up again off the 6,000 again, Ty.
Yeah, and this is why we're swing traders, guys, because we don't want to be sitting in front of the screens all day. Like Forex, obviously, because the liquidity is much higher, you'll find that your levels of supply and demand are far better respected. But on the daily and with high liquidity, a high liquidity coin like BTC, for example, this is where this is going to play out phenomenally well, as it does with many altcoins as well. But the lack of sort of volatility in comparison to low liquidity altcoins makes this a really killer strategy. So what we can do is we can sit at the start of July, as we did, where we pivoted. We can place our buy, we can place our supply lines, and we can set this trade and we can walk away, ads.
Correct. You would be sitting in this trade for roughly a month, and you would have picked up 37 and a bit % off that one.
Yeah, and playing that at just a minimal leverage, whether you play it at spot or 5x or 10x on BitMEX, which is 5x is usually what we suggest for our beginner leverage traders. That would have made a really, really nice trade. Around 150% you would have made on that.
Absolutely. So never go broke on profit, Ty. 150%.
Absolutely.
It's not a bad trade.
Not a bad trade whatsoever. So the last thing we want to put on this as well as one of our favorite tools is the Fibonacci tool. And we do dive a lot deeper into some of our favorite tools. You can see at the very top left-hand side of the screen there, we've got Ichimoku as well. We won't dive too much into that. We'll do a quick overlay with this, but fibs, how do we draw our fibs? We're looking for our swing high point. We're looking for our swing low point. And as we are in a pretty clear downtrend because we haven't made a higher high as of yet, that's how we know how to draw our Fibonacci. If you need to know more about Fibonacci, you can go to Unity Trading Group /Fibonacci. And I do run through how we use Fibonacci for profits with quite a lot of accuracy. And as you can sort of see here, ads, if you want to explain how this is lined up really, really well here and why we use this with our supply and demand.
So drawing Fibonacci in the downtrend, obviously we start from swing high to swing low. That's the first rule of drawing Fibonacci in a downtrend. The good thing about fibs, and the reason why we use fibs in our trading strategy alongside supply and demand, trend lines, everything like that, is because it lines up really well with our areas of interest. So you could probably see straight away, if you're familiar with Fibonacci, that our 61.8 fib lines up almost bang on with our level of supply there, Ty. And I think that's a match made in heaven.
I couldn't agree more. It's phenomenal. You know, if you look behind the premise of Fibonacci and how Leonardo Fibonacci developed these numbers, it's pretty spooky how well this works, not only in nature, but in trading as well. And we will do a very quick overlay ads of our Ichimoku indicator as well. We use the standard Ichimoku settings, being 9, 26, 52, 26. If you need to know more about that, you can go to Unity Trading Group /Ichimoku. So if we overlay that with our fibs and everything that we just drew in a second ago, 2 ads, we can see how well these numbers line up. So we've got pretty much cloud resistance there between the 50 and the 61.8, which gives us an indication of where we might be rejected.
Mm-hmm.
And then we've also got our we won't get too far into it. We've got a bullish TK cross there, which pretty much happens off demand, giving us an indication that we are headed up further as well.
Yep.
And then we've also got our Chiku, which hasn't broken through the cloud, giving us an idea that the trend will not continue. So what does that mean? It is quite confusing, but this is something that we dive into a lot more with our inner circle students. But of course, you can learn more about this, as I said, at Unity Trading Group /Ichimoku. So there we go, ads. That's
Perfect.
pretty much it. Supply, demand, trend lines, fibs, and if you want to take things a little bit deeper, Ichimoku. So I hope you enjoyed this quick sort of 3-part trading strategy that we love to trade, has become the bread and butter, the staple of our trading, obviously with some variance and a lot more behind the scenes action as to how exactly we use this. But you can come and join us over here at Unity Trading Group in our inner circle. We'd love to see you there. But in the meantime, trade safe and we'll see you soon.